Hey everyone, me Kevin here with a stimulus update for Saturday, June 6th. The White House just released another update regarding the next round of stimulus. This update does come on the heels of Donald Trump yesterday suggesting that there will be additional stimulus, those were his words, and over 7 times between himself and Mike Pence, we heard them collectively push for a payroll tax deduction, which does not make us very happy. But we have a little bit of new information today. But first, if you have not yet watched my video yesterday, you should probably already know, and if you don't, here you go, that the payroll tax deduction disproportionately hurts those people who make less money. It's basically just a small increase in pay that you would receive every time that you would get paid, so you kind of have to go back to work and then get paid, and then you see a little bit of a benefit. And the problem is really anybody making less than $50,000, it's going to take them quite a while to earn that entire payroll tax deduction and actually see some kind of stimulus. It's totally the opposite of, here's a stimulus check, and you get this instant relief, this instant ship that comes in. And I guess I shouldn't really say ship because, come on, realistically, $1,200 isn't that much. It's helpful, but it's not really as much as we need. But the big problem is the payroll tax deduction really hurts people making between $10 to $20, $25 an hour. Yesterday, somebody said, well, come on, fair is fair. I mean, poor people are disproportionately helped by the $600 a week in unemployment. And while he's right about that $600 a week of unemployment kind of disproportionately helping those who make more or less money, what we have to remember is poorer people always lose when there's a recession. The rich always get richer. Every time there's a recession, it's harder to get into new jobs. It's harder to advance with the skills that you learned in school. And basically, if you're poor, you might not have even gone to college, which makes you even more likely to stay in a paycheck to paycheck situation for longer. Every time there is a recession, the wealth gap grows. The poor stay poor and the rich get richer because they have the means to take advantage of it. They've got the real estate, the assets, the stocks, the connections, the CPAs, the attorneys, to take advantage of every loophole that poor Americans can't. Now, in my opinion, this is exactly why we all need to open up a Webull account, deposit $100, and get started trading stocks. You can see that link down below, right next to the link for life insurance, my awesome programs, and of course, the link to see what kind of stocks I like. My favorite ones are down there. But let's keep going. And look, I get where this person is coming from who left that comment, but 99% of you leaving comments agreed and suggested, you know what, that payroll tax cut, it's not gonna help us as quickly as stimulus really should. This isn't even to mention the robbing of Social Security. Now, don't get me wrong, just because Donald Trump is talking a new payroll tax deduction doesn't mean that the $1,200 checks or the extension of unemployment are off the table, although we are expecting modifications to the extension of unemployment. This is just to say that the payroll tax deduction doesn't really help the people who need it most as fast and efficiently as it seems like it would. Now, then I've had other people leave comments saying, oh, well, Kevin, now you're really showing your liberal bias. It's funny because I get literally just as many comments of people going, why are you always shilling Donald Trump's information and you're not talking about what the Democrats are doing? You just can't win. But right now, the bottom line is the spotlight is on Republicans because they're the ones to make the next move. It's like playing chess. Am I supposed to talk about the dudes waiting for the other dude to make the move? You know what I mean? But anyway, yesterday we broke those numbers down, so feel free to take a look at the numbers and to see how payroll tax deductions would affect you. That was the June 5th update, but let me give you the latest here. According to Larry Kudlow, he is the director of the National Economic Council. He basically sits in the White House all day long. Okay, maybe not all day long, but he hangs out in the White House and tells Donald Trump what he thinks about the economy. Larry Kudlow is like this infamous, oh, well, things are getting better, let's wait and see kind of dude. And he just gave us a little bit of an update that's actually frustrating. And this shouldn't be much of a surprise that, wow, our government is giving us a frustrating update. But the bottom line is Larry Kudlow said, hey, you know, we're probably going to vote on something after July 4th. But the problem is we have 3 voting days before July 4th. We have the 30th, we have the 1st, and we have the 2nd. And then Congress goes on break on the 3rd. We have 3 voting days before July 4th. If Larry Kudlow says we're probably going to pass something after July 4th, well, don't think, okay, July 5th, 6th, come on, it's got to be one of those days. That would make too much sense. No, there's a large break. They call it a recess. And so it's unlikely that we'll see any kind of votes actually happen before July 20th when that recess ends. Now, another thing that I've been getting bombarded by a lot of y'all, and look, I love y'all. I love it when you do this because it makes it very clear that I need to talk about something, and that's exactly what we're gonna do. So thank you for your messages. You are being heard. Thank you for your comments, your posts in Discord, the Instagram, everything. Thank you. There's a lot of concern over the unemployment data. Let's talk about the unemployment data. The unemployment data obviously came out very optimistically and to a lot of fanfare. Well, there have been a lot of reports that the unemployment data is skewed or rigged, and I want to speak to exactly those things. Well, here, my friends, is one of your culprit. This is, yes, the New York Times. I know they're on the left. Try to put that aside for a second, but just take a glimpse of what they do. They say, okay, so we've got 13% unemployed. That's what the data says. But when we go through, we're actually missing some people here. There are some people that aren't being counted for various reasons, such as if you are only marginally attached to the labor force, you didn't get counted. But if we included them, the unemployment rate would actually go up to 14.2%. Then if we include people who say they want a job, but they haven't looked for a job, the unemployment rate goes up to 17.9%. This, I guess, and then the rate further increases if we include the U6 measure, which the U6 measure is the people who are working part-time or have their hours cut. Then, if we combine that with all of the other groups of people who should be counted, the unemployment rate, the expanded unemployment rate, should be 27%, which is obviously way worse than what was reported yesterday. Why is this, and why is everybody jumping up and down about this great unemployment report? Well, here's the thing. Every single time the unemployment report comes out, this same stuff happens. Everybody initially gets excited over it, and then there are a million articles about how screwed up the unemployment rate is. Let me just show you a very quick sample and try to prove this to you, and then we'll make a conclusion. Take a look at this. So here is an article, look at that, from July 11th, 2019. Unemployment is low, but that's only part of the story. And they go in and kind of talk about that same thing I just showed you. Here's another one. Misleading unemployment numbers may be prompting the Fed and Bank of England to make a huge error. Look at this. September of 2018. It's every time. Here's another New York Times one from July 11th, 2019. It's like they write the same article. Unemployment is low, but that's only part of the story. All right, we got that. Just type into Google, unemployment, deceptive data, and this is literally what you get. It's the same thing over and over again. In fact, here you go. Here it is from the Bureau of Labor Statistics themselves. They talk about how they revise unemployment data, and they say that at the end of each calendar year, they re-estimate for seasonal factors, and they end up doing 4 to 5 changes to the data that comes out, and basically the data is never accurate. So what the heck is the point then? Why are we jumping up and down over these reports that are basically always skewed? There's no point to get excited about it when the information is wrong, and does this mean the stock market's gonna crash on Monday because, oh my gosh, these reports came out that the data is maybe not as accurate as it should be? Well, let's take a look at that. But first, make sure to get your 2 free stocks with Webull. Deposit $100 with Webull, get 2 free stocks, sign up for your life insurance in the link down below, and check out my awesome programs on finance, investing, and real estate. All right, let's hop on over here. Look at this. This is the way I look at it. When we have unemployment data that goes up, it's bad. And this unemployment data that shows the up, it follows the same way they collect data in the way they're collecting data now. And when it goes up again, that's bad. What we're really looking at now is an inflection point. Yes, the way they collect data, the way they've always been doing it is funky. But because we've now seen an inflection point, you have the stock market going bonkers and going nuts. And that's the difference that I believe the market sees and why there's so much enthusiasm. So yes, the data is screwed up. Yes, the way they collect the data is messed up. But at this point, you kind of just almost shake your head and go, did I really expect anything different? So, well, folks, there you have it. Very disappointing news regarding what Larry Kudlow said. Just keep in mind, though, he is like the perma bear at the White House, which a bear in the stock market, in case you're not familiar, is basically somebody who wants the stock market to crash. He's kind of like the dude in the White House that's always like, no, we don't need more stimulus. We got to focus on the debt. We need to be cognizant of money and our expenses right now. Okay, Larry, okay. Which, how many of you have seen Impractical Jokers? Larry! Thanks, everybody. We'll see you next time.